Hello and welcome to my take on your Daily 5 for the 22nd of September. My name is Julius de Kempenaer, presenting to you from Amsterdam in the Netherlands, and today it is my turn again to host the show for you. I'm a senior analyst here at StockCharts.com and the creator of relative rotation graphs, so no surprise that you will see a few of those in the show. You can find my contributions in the RRG blog on the site, as well as on StockCharts Television, where I host Sector Spotlight every Tuesday from 10:30 to 11 a.m. Eastern. If anything related to sector rotation and relative strength has your interest, please check out these resources, or even better, subscribe to them so you will get notified when new articles and episodes have been uploaded. I do enjoy the interaction with viewers and readers, so if there's anything you want to share, please make use of the comment sections below articles and videos, or simply drop me a message via email. In this week's episode of Sector Spotlight, I mentioned that I am of the opinion that the market is in a transition mode, more or less a risk-off mode. We're not quite there yet, but I believe that we will see a little bit more risk-off price action, and that usually means that we will see good things in defensive sectors. It's been going on under the hood for a while, but I believe that we will see it coming to the surface in coming days, maybe weeks. So for this Your Daily 5 show, I want to dive into a very typical defensive sector, and that's the consumer staples sector. And if you look at the RRG for sectors, so these are all the sectors, and we highlight the consumer staples sector, then you'll see that it is on the edge of the lagging and the improving quadrant. It's trying to move from lagging into improving. You'll also see that it's got a very short tail, so it's been hovering around that level for quite some time, been making some rotations from improving to lagging, and now it seems to be getting back up at a very short tail. So we need some sort of a spark, some sort of an ignition to make that tail move further into improving and then into leading. In order to find some interesting names to play defense in the consumer staples sector, I brought up the members of the staples sector, XLP, against XLP as the benchmark. Now you can see that this is a quite full chart, a quite crowded chart. So what I did is I scrolled and scanned through all the tails to find the ones that I am interested in, either from a long perspective or from a short perspective. And I put those on a single chart with only those tails so we can have a better overview of what we are looking at. After this exercise, we are left with this RRG, which has pretty much the tails that are pointing in a northeastern direction, a strong RRG heading, and a southwestern direction, which is a weak negative heading. So we're going to find the good and the bad stuff out of the staples sector. Too much to go over all these charts in this show, so I picked a few of which I think that they've got good opportunity. And I want to start with the ones that you should probably better avoid playing defense in the staples sector. Those are HRL, which is inside the lagging quadrant and pointing further into it. And if we bring up the chart for HRL, then you can see why that is. I mean, that relative strength is nosediving. It's confirmed by falling RRG lines. And you can see that the price chart is dropping below a very important support level. So HRL, is very likely to continue its underperformance versus XLP and the S&P 500. The second one is CLX, Clorox company. And you can see that this one is rotating from improving back to the lagging quadrant, and that's usually the sign that it is a second or a third down lag in an already established relative downtrend versus XLP. On the chart, if we load up CLX, Clorox, and we see that This is in a pretty steep downtrend from mid last year. It's approaching this support level around 160. But if you look at the relative strength, then it already drops below its lows of 2018. And that trend is very stable, pointing further downward. So for CLX, I also expect a further underperformance going forward. It's important to know where you should not be in the staple sector if you want to play defense, because these are expected to underperform the consumer staples sector. So if you want to play defense with individual names inside staples, you should better avoid HRL and CLX and a few others that we were not able to deal with. But if you go over the chart, I'll put the link of this particular RRG in the description of this video so you can load it up for yourself. Now, where are our opportunities? I think the first one is with Walgreens, WBA. You see it's got a long tail and it just moved from the lagging quadrant into improving, which means that there is strength behind the move, there's power behind the move, which is a good thing to know. And it's still relatively low on the RS ratio scale, but it's pointing in the right direction. And there seems to be a lot of power behind this move, and that's a good thing. So if we load up the individual chart for Walgreens, then you'll see that it is inside a range. We've broken out of a long downtrend, a 2-year downtrend at the end of 2020. We just bounced off support in the 44, 45 area. And I think there's opportunity to move higher, at least towards the 55 area where the upside of the range is. And it seems to be doing the same thing inside that range in relative strength. So these RRG lines are picking up. So WBA, which is also a big stock in the S&P 500 within this sector, makes a good opportunity to have some defensive ingredients in your portfolio. And the second one is TSN, Tyson Foods. It's got a similar rotation, a similar tail as WBA, not as long, but it's moving in the same direction. It's been picking up a lot of relative strength recently. So if we bring this up on the price chart, Tyson Foods, then you see that this one is actually in a very nice uptrend. It's in a range on relative strength, and that's why it's now popping up. It's surfacing because we're starting to move higher in that range. If that uptrend in price can continue, and we can absolutely break out of that range in relative strength, that'll push those RRG lines higher and make Tyson Foods one of the more interesting stocks inside the consumer staples sector. And then finally, there is MO, ticker symbol MO, which is the Altria group. And you can see that it is still inside the lagging quadrant, but rapidly moving towards improving. And then you got long tail, less long tail, and a little bit less long tail. Nevertheless, compared to the rest of the group, this is a pretty strong sign, pretty strong pickup of relative momentum. And if we bring up the chart for MO, for Altria, then you can see that it left that massive downtrend. That's a 3-year downtrend at the end of 2020, moved a lot higher at the start, and then went into a consolidation. That was reflected in a drop in relative strength. So we moved from a strong downtrend in relative strength to a more sideways move. We're bouncing off support, and the RRG lines are starting to pick up. The good thing is that in price, it already left this consolidation pattern, and we're remaining above this rising support line. So looking at this chart, I wouldn't be surprised if we see a low coming in here against that support line and then moving higher, potentially taking out those recent highs, pushing relative strength higher, making MO one of the more interesting stocks inside the staples sector. And that concludes your Daily 5 for today on how to play defense with the staples sector. Thank you for watching. I hope to see you again at a new episode of your Daily 5 in the future.
Hey, Grayson Rose here with StockCharts. Thank you so much for watching. I hope you enjoyed that video. If you did, consider giving it a like down below, maybe leave us a comment, and if you're new to the channel, you can subscribe at the link up above. We're gonna bring you daily content from an incredible collection of technical analysts and financial experts.